Hey guys, my name is Shane. I'm the Managing Director at Chart Smart Signals. If you haven't hit the subscribe button yet, make sure you do that right away to never miss one of our future clips. And if you want to reach out to us, there's several ways that you can do that. We'd love to have a one-on-one discussion with you and assist you with your journey, and even if it be a goal setting and a little bit of a plan as to how we can get you on board and working with us. Without further ado, I'm going to be covering an introduction to Forex trading, give you a brief overview of what it is all about and how you can get started. What we'll be covering in this short clip would be what is Forex and what is Forex trading, the different currency pairs in the markets, and then obviously choosing a broker, which is probably one of the most important aspects of trading. The goal will be to up your performance as a trader by mastering the trading cycle. We want you to understand each stage, set clear objectives, and effectively execute on your next trade. So without taking too much of your time, we'll be moving on now to the table of contents to go into a bit more detail what we'll be covering in this clip. What is Forex? What is Forex trading? The different currency pairs, Forex market hours, online trading, selecting a broker, and if you need any help, how you can reach us, and just a general disclaimer. Once again, make sure you hit the subscribe button. Feel free to pause this clip or to share this clip with friends. And let's get into it. Forex, commonly referred to as FX, is the short-term name for foreign exchange. Simply put, it is a global financial market which allows one to exchange one currency for another, otherwise referred to as currency trading. The easiest illustration would be that of overseas trip, where you would have exchanged your local currency into the currency of the country that you are visiting. We are certain that you have seen foreign exchange booths at the airport where this exchange can be done. If you have ever participated in this exchange, then you have been involved in FX trading. What is Forex trading? Thanks to globalization, financial markets have been forced to become sophisticated, and simple exchange of currency for an overseas trip has evolved into an opportunity to profit from one currency strengthening against another. The easiest way to think of trading is to imagine a country's currency as a reflection of the strength of the country's economy. For example, if you thought that the US economy was stronger than the South African economy, then you would sell your South African rand and buy US dollars. When the South African economy showed signs of recovery, you would sell your US dollars and buy back South African rand. The difference in price between these exchanges of currency would result in profit or loss. Different currency pairs. So the simultaneous buying of one currency and selling another is referred to as a currency pair. One example from the previous would be USD and ZAR pair. Currency pairs are grouped into three different categories: major currency pairs, which will be known as majors, minor currency pairs, which will be known as crosses, and exotic currency pairs, which will be known as exotics. The majors is a pair that features the world's most frequently traded currencies. These are generally the most liquid currencies, meaning they are the most active. The majors will always include the USD in the pair. The minors or crosses are currency pairs that do not include the USD. These pairs may not be as active or liquid as the majors. They may be less predictable but provide a lot of trading opportunities. The exotics will always consist of major currency and one emerging market currency. These are the least traded or liquid currencies. While the exotics may be the sensitive to event risk, there is often a lot of opportunity in these pairs. Right, so in terms of market hours, an attractive feature of Forex trading is that the market is open 24 hours a day, 5 days a week, which is Monday to Friday. If we couple this with the fact that Forex is the world's most liquid financial market, then there's clearly a market with an abundance of opportunity and convenience. The market opens every Monday morning when traders wake up in Auckland, New Zealand, and close on a Friday evening in New York. Generally speaking, though, there are three major financial centers around the world which dictate peak trading shifts during the day. These are referred to as the Asian, European, and North American sessions. The Asian or Tokyo session runs from 11 p.m. to 8 a.m. GMT time, and the major players in the session come from Tokyo, Sydney, and Russia. Although there is always some opportunity in selected pairs with liquidity in each session, it's generally not as liquid as the other two. The European or London session begins as the Asian session and ending typically runs from 7 a.m. to 4 p.m. GMT time. Major players include the UK, Germany and France, which means the first hour is most volatile. The European session is the most liquid session in the financial markets. So just a little overview of that, and depending on what sort of volatility you'd like to be trading in. With volatility, there's obviously more opportunities, ultimately it really depends on yourself and your strategy and your style, and your objectives of your trading. Great. So the North American or New York session runs from 12 p.m. to 8 p.m. GMT time, and the major players in the session come from the US, Canada, and Mexico. Given that there are several overlapping hours with the London session, there's often high volatility in this session. To understand how to exchange currencies on holiday, it is important to note that most Forex trading is actually based on speculation, and hence the rise of the online Forex broker. Most traders speculate on whether the price of a currency will rise or fall and use a derivative product to take advantage of this mismatch in pricing without taking ownership of the underlying asset. So there's no physical asset that you are buying or selling when trading the Forex market. The benefits of online trading is that a trader does not need to own the physical asset and can instead speculate the difference between where a price opens and closes. There are a few things that we need to grasp before placing a trade with our online broker. Going long or short. So those are two terms that you need to become familiar with. To go long in the market is a term used to describe a trader that believes that the market price will increase over a certain amount of time. To go short, the market is a term used to describe a trader that believes the market will decrease over a certain time frame. Effectively, going long or short allows the trader to take advantage of markets that are both rising and falling. The trader would go long by buying the market and go short by selling the market. An example would be if a trader believed the euro would decrease in price against the USD, the trader would then want to go short with the euro and long with the USD, and would take a position on their online broker by selling the euro USD Forex pair. The loss or profit from this position would depend on the extent of the market movement. If the euro did decrease, then the trader would make a profit, but if the euro increased, then the trader would make a loss. So another term that you must understand is leverage. One of the key reasons that make the Forex trading so attractive to traders is the introduction of leverage. The most basic description of leverage would be the allowance of borrowed funds from the broker, which enables an increased size in trading position. So the leverage allows for greater market exposure for a fraction of the cost. The trader should remain mindful that leverage magnifies both profits and losses, and so it is important to practice a sound risk management strategy to ward against overexposure. Margin. When trading online, your broker will require you to have some available cash in your trading account, which is equivalent of a small deposit in order to open a leveraged position. There are two types of margin. Deposit margin, it is the initial funding which is needed to have an open position. It will reflect as a percentage of the total trade. An example would be an account with a leverage ratio of 100 to 1. To open a $100 position, a margin of $1 would be needed. Right, so let's go over that again. An account with a leverage ratio of 100 to 1. To open a $100 position, a margin of $1 would be needed. Maintenance margin is an additional funding that an account may need in the event that losses exceed the initial deposit. This is also referred to as a margin call, where funds will have to be topped up or the position will have to be closed automatically. This is a standard across all brokers to protect your balance. This is a default setting on all brokers, as I just mentioned, and it is something that you must be mindful of when opening up your trading account and when starting to trade with a live account. Spread. The buy and sell prices are a way of expressing the bid and offer price. The offer price is where the trader buys and the broker sells the instrument. while the bid price is where the trader sells and the broker buys the instrument. The difference between the buy and sell prices is known as the spread. Trade size. Trade size is the amount that you want to risk on the movement per unit in any given instrument. The profit or loss is calculated as the difference between trade open and trade close price, multiplied by the trade size. The difference between the buy and the sell price is known as the spread. So, in terms of selecting a broker, as I mentioned in the beginning of this clip, it is vitally important that you select a broker that resonates with your objectives of trading and you really understand the broker. One of the first points that I would recommend in looking for is a regulated broker. So, a safe and trustworthy Forex broker is paramount in selecting your favorite broker. The best way to ensure that your Forex broker is regulated. A regulated broker offers credibility and provides a set of regulations which brokers must respect in order to retain financial trading licenses. The broker should supply this information on its website. Trade Nation is regulated by the FSCA in South Africa and works with liquidity providers that are licensed in the UK, Australia and Bahamas. Costs of brokers. Unfortunately, transaction costs are incurred every time a trade is entered and usually charged through either a spread or a commission. Transaction costs can erode into your profits, and so it is advisable to find a broker that charges very low commissions and low spreads. Once again, Trade Nation charges 0% commissions and spreads as low as 0.6. In terms of withdrawals and deposits, you would want to find a broker that has a speedy execution on withdrawal requests. Forex brokers should offer a transparent service with fast processing times and convenient deposit channels. Trade Nation gives each trader the opportunity to withdraw at any point. This will be in your bank account from when the deposit came from within 2 to 3 business days. Ensure that you deposit funds from your own account to prevent any delays in the withdrawal process. In terms of a client-first approach, a personalized one-to-one support and abundance of educational tutorials, webinars and analysis to help you on your journey. This can all be found on the Trade Nation's website. We're also there for you. Just reach out to us via one of the many ways that we have provided, and we'll assist you with any questions that you may have. In terms of reaching out to us, you can always reach out to us via our website, www.chartsmartsignals.com. Our Facebook page is the @Pro Day Traders, that is our username. Instagram handle will be @ChartSmartSignals, and Telegram is the @ChartSmartSignals_bot. We have a WhatsApp line that you can reach us on. It is +27 82765 2487, and we have 2 email addresses that are available to you, one being admin@chartsmartsignals.com and the second one managingdirector@chartsmartsignals.com, which is my personal email that you can reach me on if you have any queries or questions. I'll be happy to assist you with that. In terms of our disclaimer, high risk investment warning: trading foreign exchange and or contracts for difference on margin carries a high level of risk, may not be suitable for all investors. Chartsmart Signals does not provide financial advice to its clients. Before deciding to trade the products services offered by Chartsmart Signals, you should carefully consider your objectives, financial situation, needs and level of experience. You should be aware of all the risks associated with trading on margin. Chartsmart Signals provides general suggestions that does not consider your objectives, financial situation, or needs. The content of this Telegram channel must not be construed as personal advice. Chartsmart Signals recommends you seek advice from a separate financial advisor. Our risk disclosure notice: you should assume that Chartsmart Signals, telephone lines and messages are recorded, although this is not guaranteed, and shall remain exclusive property of Chartsmart Signals, which constitutes as evidence of instructions you have given and may be used for purposes by us, including as evidence in any dispute. You should keep a written, timed and dated record of dealings with Chartsmart Signals. Chartsmart Signals is bound by the Data Protection Act. For more information, contact us. You can reach me directly on the email that I provided on the previous slide. Chartsmart Signals is officially partnered with Trade Nation Financial Pty Limited, registration number 2018/418755/07. which is an authorized financial services provider under the Financial Advisory and Intermediary Services Act number 37 of 2002, FSB number 49846. Trade Nation is a trading name of FINSA Europe Limited, financial services company authorized and regulated by the Financial Conduct Authority under the firm reference number 525164. Our registered office is 9th floor, 30 Crown Place, London, EC2A 4ES, United Kingdom. Trade Nation is trading name is FINSA Pty Ltd, a financial services company authorized and regulated by the Australian Securities Investments Commission. ACN 158065635, AFSL number 422661. Trade Nation Financial Limited, registration numbers 2018/418755/07, is authorized and regulated by the Financial Sector Conduct Authority, FSP number 49846. Trade Nation Limited, registration number 203493B, is authorized and regulated by the Securities Commission of Bahamas, SIA F216. Great, thank you so much for watching this short introduction to Forex trading. I hope that it has given you a better overview of what it all entails and how you can get started. Please reach out to us. We will happily assist you with getting started on your journey and getting set up on your broker, your trading account from your mobile phone or your laptop. This can be done anywhere and anytime, and we look forward to working with you. And don't forget to hit the subscribe button.